Hello everybody, welcome to TraderMerlin Show, your Wednesday Hump Day edition. Yes, you are right, Tom. I am not happy about the S&P move today, especially the way it ended. It was just such a powerful move. Obviously, for that long-term position, have not been a good, let's say, week and a half. Boy, it's just been nothing but up. We've had 2 down days in almost 2 weeks, and these moves up have been incredibly strong. So yeah, certainly not happy about the put options I have out there, but I'll wait. I got plenty of time. Just my optimism is waning, especially given the enthusiasm and the breakout in blue sky that we are seeing on some of these equity indexes. And I'll talk to you about blue sky here in just a second. Again, we're broadcasting live today, so as you like it, give us some thumbs up there. And thank you for those who have already hit the thumbs up button. I appreciate it. For those who might be new, click that subscribe button. I do the show every day, Monday through Friday, live, and we also put out a video on Saturday. I'll probably put out some more videos here soon once I get some free time. That said, let's start things off with what's going on with your market update. It was a wild one out there today with some incredible swings. I'm going to start our way at the bottom, which actually is a really good chart, by the way. We had the second day in a row, the second time that crude oil has come up to that $35 mark and just couldn't do it and had an aggressive move to the south side. What's interesting about this chart, and I'll zoom in a little bit here for you, is you see the last time that happened, we talked about it on the program, said, hey, we're getting right to that $35 mark. That was on the 21st of May. The next day, we had a great sell-off, but it showed incredible resilience because by the end of the day, it didn't have a long, big red candle. It was just a small little, call it a hanging man formation. Today's a little bit different. Today you actually had it closing near the lows, which is certainly showing a bit more negativity just by the candle structure. But same thing, came right up to $35 yesterday. We actually hit a high of $34.81. Now we're down to $32. So this has been a nice point for anybody who's looking at shorting crude oil as it approaches that $35 mark. And you might see it drift lower here, just the way that candle closed today. Kind of contra the other indexes, looks to me like you might see some further downside movement. That's your worst performer, down 6.2%. So pretty good sell-off there in crude oil. Now, gold, we had at $17.23 was the closing price for gold. Although it is a hammer formation, it is at, you could call it an area of demand, although, you know, let's be honest, it's not really a great demand zone because of how many times it's hit. But you notice this has been kind of an aggregated area of price turning points right around that 1700 mark, and we came down to that today before bouncing back up and having a hammer formation. So just like I mentioned on yesterday with the NASDAQ 100, this could be a potential play on a close above that high that we achieved on today's candle, which was going to be, the high was 1729. So we get a break above that, you might have some nice upside movement. Now, yesterday we talked about the shooting star formation that happened on the NASDAQ 100, and I'm hoping that some of you made that trade today as it broke down below. If you follow that simple rule that I've been telling you to do with shooting star formations or hammers, this is a great trade. There was a lot of opportunity in this one and some significant moves. Of course, what was crazy about today with the NQ is how it whipsawed, and we had a big down day. And let me mark that off here so you guys can see exactly what we're talking about for those who might not know what I'm talking about. I'm marking off the low of yesterday's candle, and one of the rules that I go by with shooting stars is it has to open up here and then sell off down below that line. And if you notice here, we go to a 5-minute time frame. We'll zoom out a little bit. You had in a period yesterday where there was that low, it actually came back down to it, so it's still no trade. As soon as it broke down below it, you had a huge move down from 93.73 all the way down to a low of, I'll get the reading here for a second, to a low of 91.72. So you're talking a 200-point move in that NQ based off just a simple shooting star formation, which is a very basic rule. And then all of a sudden you saw this thing rip to the upside, and most of those major market indexes following suit, just showing some incredible pops to the upside to finish the session real strong. Now, NASDAQ, it looks like it was actually down on the day, but it wasn't. It was actually up 0.37%, closing at 94.41. We'll move on to the S&P 500, which has been the thorn in my side. Look at that closing. Son of a, that's just one of those, just chaps my hide, those types of moves like that when that happens. But it's okay. We'll leave it there. 3,037 is where it's at right now. I thought we'd struggle a little bit more than we have at that 3,000 level. We kind of traversed across it on the 25th, the 26th, and now it just doesn't look good for me. It looks like this is just going to continue on to the upside here, especially when you look at the .D or daily chart. there's really not much to stop this thing to 3,100, which, obviously would put a nice dent in my put position. Right now, you're looking at a 35.50 on the S&P. That's a gain of 1.42% on the session, which is still a long way off from our best performer. We mentioned yesterday Russell 2000. I said if it gets above this line here, which was right around 1373, so there's really not much on this chart. The closing the gap is the first obvious sign that we had. We mapped that one out yesterday, or maybe yesterday, day before yesterday, talking about that gap closing. We are literally at that closing price right now. It was 1440 was the gap origin, and we are at 1439 right now. I still think you're going to look at more upside movement here for the Russell. It just looks way too strong, and there's not much to stop it after this gap, other than these highs right around the 1510, 1515 mark. So all in all, looking really good. Move on the Russell 2000, which put it up 3.21%, and that's not even the best performer. Best performer goes to the B, to the T, to the C, Bitcoin. Now, it's not the prettiest pattern out there, but it did have a 4.44% gain for Bitcoin, putting it up to 9,175 on the session, and that is where we finished off that one. Hopefully put some green into your pocket out there for today's trading session. All right, two things. Yesterday, I made a comment about Peter Navarro. Yes, Peter Navarro, one of Trump's advisors out there. I wanted to clarify that, and I'm just cleaning up my monitors over here, because I think it was, if I'm not mistaken, I believe it was Mr. Barr, who is El Toro in our group, said he studied under him, got his MBA there. Well, it's funny, if you go all the way back into I want to say it was 1999 or 2000. I actually taught for the master's program, not taught. Let me take that back. That makes me sound like I was a professor at UCI. I was not. I was brought in to present and do kind of a whole class session just on the new technology of direct access trading, how electronic communication networks were just starting out and what that meant for the industry as far as transactional volume and things like that. And it was so great because I was showing these students, I paid a ton of money, what I had done and how many transactions I was doing per day, and I quizzed them. I said, how many transactions do you guys think I'm doing per day? And one guy was like, 10, 5, and I'm like, 550. And they're like, you're a liar. I'm like, nope, here's the trading statement. It was so great because Peter Navarro, he's a pretty tough cookie. He doesn't take shit from anybody, and he would just dish it right back out to the students like, I want you to apologize to Merlin right now. I loved it. Anyway, the reason I said I have an issue with Peter Navarro is he wrote a book called If It's Raining in Brazil, Buy Starbucks. And there's 2 chapters in there that the stories are almost direct, verbatim copy of what I said that day in his classroom. And I was like, you at least tell me you're going to steal my stories and make them your own, and now it's your story. These were clearly my stories in this book. And then at the end of the book, I'd like to thank Merlin Rothfeld for his contributions. Contributions? I wrote 2 chapters of your book, damn it. Just straight quotes. Anyway, that was it. Oh, yeah, sorry. Well, it was back. It's funny because Online Trading Academy's original office was right across from UCI. It's just a really cool, that little court over there. Love it. I think it's the In-N-Out building. Anyway. All right, that will do my little rant piece there for Mr. Navarro. He's an interesting cat. All right, let's talk about the topic du jour, which is the retail. I called the Phoenix Rising. I didn't know what else to kind of say to it in here. I was trying to find the right image. But, it's one of those sectors that now is just ripping yesterday and today because of this lifting of quarantine. And it begs the question, if you've seen it destroyed so much, why wouldn't there be some buying opportunity out there? What is the opportunity, and should we maybe want to take advantage of some of that opportunity? So I had a couple questions that came in which spurred the discussion. And again, when you guys send in comments or questions, it really does dictate where I take the show or how I make the show flow. There was 2 questions in particular about retail stocks. I think there's actually a third one, but I'm just going to show you 2. The first one was from Arlen, which said, would like your thoughts on buying Macys stock. Had another one out here that says, when a segment of the retail market gets oversold, when a segment of the market gets oversold, like retail is, when do you plan your buy entries? Or you play your buy. I think it means plan your buy. And that's from Tom in San Francisco. So, for me, especially when something's really beaten down, I always wait for it to prove itself. I want to make sure that security has done what it needs to do to turn around. And the retail sector is kind of confusing. When we it's such a broad generalization saying the retail sector has been oversold. Should we buy? Remember, there are components of that retail sector that are at all-time highs and soaring right now. There's other ones that are at significant lows and tanking. And it's the portfolios or ETFs are generally a basket of those. So as you go through, it's important to kind of filter through and see, which of those are performing better or worse before you start saying, hey, is the whole sector returning or is just a part of that sector returning? So let me bring up some charts here and I'll run you through a couple different things. The first thing I like to do is show you guys a sector performance chart. And I know it's a little bit jumbled and hard to see. I fixed the white chart, so we're back to white. And I wanted just to kind of highlight the retail sector, which I'm using XRT as the ETF for that one. And that's right here. That's this, I can't tell you the color line. But right now, since January 1st, and all of these numbers that you see are based off of January 1st performance. So from January 1st all the way through till today, retail's only down 8%. Which, in all honesty, is pretty darn good. It looks like the S&P is down about 6%, retail's down 8%. You'll notice some other sectors out here really getting crushed. Financials down 22%. What's this guy here? Down 17% on industrials. And, of course, the worst performer out there, energy, down 33%. So it really, to me, would be more, if you're bottom fishing, retail might not be the place. Energy might be the place, honestly, from a bottom fishing perspective. So what I thought might be interesting is just to break this apart. This XRT ETF, which is a spider for retail stocks, is down 8.8%. But more importantly, what is it comprised of? And so what I did is I went out there and I pulled up all the components of XRT just to see what's moving. And I thought it would be kind of interesting. Let's see if I can, by a show of hands, how many of you have heard of Ollies Bargain Basement? I think it's Ollies Bargain Basement. Anybody? I'm just curious. Type in yes or no if you've heard of this stock. Ollies Bargain Basement, Bargain Outlet Holdings. I kind of make fun of Ollies Bargain Holdings every now and again because I'm like, I'd like to meet Ollie. He sounds like an interesting character. It's not a security that I look at. Every now and again, I identify it when it reports earnings. Some of you may live near one of these Ollie's Bargain outlets. I haven't, but I tell you what, I certainly want to go when I see what happens with this price chart. Since March, it's got to be the best performer in the retail space. And you're probably thinking, well, isn't Amazon outperforming it? No, Ollie's. Check this chart out. I was going, how the hell did this happen under my radar? I did not see it. Brendan's heard of it. Is it a Canadian thing, Brendan? Jeff, what's Ollie's? Never heard of it. Look at this move. It's an unbelievable chart. Keep in mind that when coronavirus hit, I'll put a horizontal line when coronavirus really started to get crushing the markets. Ollie's was at 58.05. It ended up dropping all the way down to a low of 28. Right? So you're talking a $30 slide. That's a pretty significant drop. But right now it's trading at $89. I'm going to round up to $90. And it has been just solid ever since. Who knew that Ollie's would be such a crazy performer? It's in the Northeast. Oh, no wonder I haven't seen it. Don't spend too much time over there. Darren, that's great. I shop there and put it in a Macys bag. Hey, I go to Ross stores and put it in a Macys bag. All right, so anyway, I wanted to show you that one. You'll notice that there's a huge cross-section of the markets here. One, that when I started TraderMerlin, I think one of the episodes I did was how to capitalize on the coronavirus, and we were talking about market segments and which segments might be better. There were two specific things we focused on. Number one was more people are going to be shopping online, so we said Amazon probably will take the lion's share. And then I was a huge supporter for eBay because Amazon was limiting what they would ship to you. eBay, I could get all the stuff that I needed. So I was a big fan on eBay. And also we talked about home delivery of foods. So for my friends out there who are gorging themselves on Grubhub and all these, home delivery networks, we knew they were going to do, or thought they would do well as well. So check out what's happened there. Here is eBay. I just want to take a peek at eBay's chart. And remember, we were talking about this in March. So, eBay hit a low of, give me the exact price there. It hit a low of $26.02. Currently trading at $44. Again, let me see if this is an all-time high. I think it is. Oh, very close to all-time high. This is a weekly on eBay. But just an unbelievable move. Fantastic for eBay. And then Grubhub was the other one that we were really bullish on. And it's also performed pretty well if we look back to the daily. It's had a great move since March. Now, why am I wasting your time with this? Because I think it's important to know who was doing the best during all of this. And if you notice this list, I'm sorting it by Bollinger Percent B. Okay, now Bollinger Percent B, what it is it's taking things that are outside or telling you where it is in relationship to its Bollinger Bands. I know we've covered this, but for those who might not be here or be following the show regularly, if you take a 20-period moving average, right, of any stock, and then you put 2 standard deviations above that line and below that line, it creates this kind of envelope, right? It's not necessarily a channel because a channel would be linear. This oscillates and changes as the moving average changes. So what a Bollinger Band percent B does is tells us where within those Bollinger Bands is price. If it's over 100%, it's outside the upper band, which really means there's very little chance it should be outside that band. I believe it's a 96 or 98% chance it's supposed to be within those 2 bands, just given straight statistics. So if it's outside the upper band, it's overextended for a reason. If it's outside the lower band, it's oversold for whatever reason. That doesn't mean we necessarily need to buy or sell if it's overbought or oversold. It's saying let's look at price charts, but giving us a clue as to how heated up those market or that individual security may be relative to its current price. So take a peek at the top list here. That's obviously Ollies. You notice it's at 111%. This thing is just ripping. It's incredibly strong. So is BJs Wholesale. I was shocked to see Big Lots on here. I didn't really think Big Lots would do well given that they're a physical retail location. So this is probably the biggest surprise here would be Big Lots. But a lot of these have online components to them. You know, you see Amazon. Here's Amazon's chart from the retail perspective. We talk about Etsy's. There's Stamps.com. A lot of these are retailers. And these are all the overbought ones. Now that said, anything above 50 means that it's bullish, right? So 62 of these securities, and mind you, in XRT, dyslexia setting in today. In XRT, there are 87 components right now. That may change. So what I'm looking at there is out of those 87, 62 are in positive shape, which means that the vast majority of those are, you're talking 75% are positive. That leaves these guys here that I'll highlight in black. These are the laggards, right? These are the ones that are bringing that index down. You notice a lot of the common retailers that have been just getting slaughtered. Chico's Fashion, Dillard's, Tiffany's. I'm surprised to see Walgreens in there, to be honest. The Buckle, Nordstrom's, Macys, Kohl's. I thought Ross Stores in here. There's Ross Stores. There's Urban Outfitters, Gap. I mean, these are all the common ones that you would go to the mall and find. That specific segment, I am still not that bullish on. I still feel that there is going to be some apprehension for those retail companies to come back online full throttle. And I think it's been an interesting test for the past 2-3 months, which has been how well do we as consumers accommodate and buy our stuff that we need elsewhere, which of course leads us to eBay and Amazon. So, long-winded Darkstar said, any nearby supply? I didn't see any nearby supply on Ollies, that's for sure. Let me bring it up here for you. What a gorgeous chart. Let's go to a weekly and yeah, you ripped through some. There is a little level right around 93, but honestly, I don't know what's driving this thing. I'd be scared. I'd be really kind of apprehensive about trying to get short this thing. You're shorting one of the strongest stocks in the market if you try to short Ollies, but so I'd be careful with that one. So the original 2 questions, let me bring that back up. No, that was another early one. When a segment gets oversold, like retail, when do you plan your buy? And also Macys stock. So let me look at Macys stock here real quick, because there were a couple of these retailers that were really beaten up that may present an opportunity, and I think it's a risk play. Here's your weekly on Macys. Okay, and I wanted to start with the weekly because if I'm looking at buying Macys in particular, I obviously want to buy it at a key point, at the right point. And I don't think that this is the right point for Macys. I know you're thinking, gosh, it was just trading at $5 and now it's at $7. Look where it was. And it's not like this is the coronavirus that started the sell-off. I'll put a vertical line or a box around what's been the coronavirus impact. Okay, so there is in blue is the coronavirus impact. Let me take that snap off for you. That has all been since coronavirus. That sell-off. Before the stock was dying. So this, to me, Macys had issues long before Corona came around, And if it was struggling that bad before, now all of a sudden people maybe moved away from Macy's even further, I don't know. It seems to me like this is one of those ones that can end up going the same way as JCPenney's. It's crazy to think that a company with as much history and prestige as Macy's could potentially disappear. Just its brand alone might be something that's got some tangible value. I don't know. I can't say as I'm that bullish on buying Macy's because of what I see on the price chart. Now, that's obviously the longer term. What about maybe just doing it for a little swing trade and a breakout? So, what about a D? Here is the daily chart of it. Now, I think if you are looking for the breakout trade, you just got it, right? Breakout, you'd be looking at it breaking some highs right around that $7 mark, which it just did. We've kind of been channeling. Oops. Let me move this up a bit for you. Kind of been channeling between, let's call it $4.30 and $7. So there's this slight little, trend or sideways play there. Now you've broken it. The question is, where does it go from here? If we play breakouts and typical market moves, I'd be looking for it to close that gap, which is going to be right around $9.50. I just don't know if I have the faith in Macy's. But we're just hearing today, at least in California, that they're going to... what's everyone calling him? Governor Gruesome instead of Newsom? Whatever. They're just hearing now here in California that certain retailers can open up. So that list that we just looked at with XRT, which had Kohl's and Ross, what was the big one? Nordstrom's, Macy's, all getting butchered. Yeah, they might get a little breath of fresh air, but I just don't see all of a sudden us flocking to the stores to, I think restaurants, I think most of us would be pretty excited to go to a restaurant and actually to have someone serve us food and be in a nice environment. I had a great time, I think I told you on Saturday at a restaurant. I love just going out again. The bars, open those up, I'll be a happy camper, but I don't really shop at Macy's anyway or Nordstrom's. I'm more of a Ross guy, as you can tell by some of my funky apparel. So, not a huge fan of that price chart. If you are going to go straight breakout, yeah, okay, you could make a play here, but put a stop loss in there because I just don't see Macy's coming back to life and getting back up to its $16 mark where it was back in February, right? That's what it was, Tom. New slum. You guys are funny. AVP says, I don't want to see a Tesla Thanksgiving Day parade. Why not? It could be all battery powered. It would be really entertaining. That's a good one. I even thought about that. Let me see here real quick because I read through some of these questions. Big Eb says Macy's business model is outdated. It's only a matter of time. Yeah, and I speak for myself here, and I think that many of you probably fall in the same category as me, which is I'm going to call myself a frugal consumer, which says, look, I can go buy myself great clothes at a store where I'm not going to be paying tons of money. Macy's and Nordstrom's, you're paying a pretty pricey thing. And why? Because I go to Nordstrom's, I get to hear some guy play the piano for me as I go shopping. Save the piano and give me another 30% off price. I'm a dork to this extent, guys. It was raining here. This is probably 2 years ago. It was raining and I had nothing better to do, so I went to a local sporting goods store and I spent about an hour and I tried on every brand of manufacturer of shoes that they had. And you're thinking, what? This guy's an idiot. Yeah, I could be an idiot. Just ask my exes. So what I did is I wrote all the shoe sizes, which you'd be surprised. Like Nike, I'm a 9. Prada, I'm a 6. Kenneth Cole, I'm a 7.5. And so what I do now is I just order all my shoes online. I go, ooh, these are really cool. These are A6 running shoes. What size am I? Okay, 8.5. I order it that way. I don't want to set foot in these stores, and I don't want to pay retail prices like Nordstrom's or Macy's is going to charge me to get my Kenneth Cole, work shoes or nice dress shoes. So, I don't know. I think that there's a shift coming where people are just going to be a little bit more cautious about their spending. And I still think you'll see Nordstrom's and JCPenney's struggle. Now, what about Nordstrom's? Nordstrom's and JCPenney's today both had huge up days. Here's Nordstrom's. Sadly, Macy's looks better, right? And why? Because Nordstrom's has been sitting underneath these highs it established back in April, and it just can't seem to break that $22 mark. Whereas the chart of Macy's here, much stronger. This is the type of thing Corey Lane would be talking about, more of a breakout trade, although Corey wants to see some sideways action right at those highs at $7. Didn't get it there. What about companies like Ross Stores? Ross Stores recouped a lot more, and I think this goes hand in hand with what I was talking about, which is I can go to Ross Stores, and while I won't be able to go and go to the Quicksilver rack of Quicksilver apparel inside Nordstrom's or Macy's, but I can find Quicksilver stuff at Ross Stores. It's just there isn't a rack. You got to go find the diamond in the rough out there. So I don't know. I'm more of a Ross guy. I saw someone else in here saying that the Ross stores was high class. Sure, there's high class out there. So you're supporting Ollies. Hey, I wouldn't mind checking it out. I don't know what they do, but anytime I see a price chart like that, Dark Star, I got to be interested. I got to be interested. Kohl's is surviving because they handle the Amazon returns. Yeah, and you know what? The way things are going, I mean, you got to give it to Amazon and Bezos. Right now, if I'm Amazon, I might be looking at some of these thinking this could be a distribution center, an access point for my retail. Kohl's could be a target. I don't think you'd go for Macys. I don't think you'd go for Nordstrom's. But Kohl's, kind of a mix of everything in that store, and he's already got his foot in the door with regards to the Amazon lockers. You could see that maybe being an acquisition target going forward. Let's see. Natalia says, I bought clothes with Macys tags at Ross stores. Jackpot. Yeah. I mean, a lot of times it's just what they don't get rid of at those higher end stores, your your Nordstroms, or it's the JW in the ticker symbol for Nordstrom's that always throws me off. It's been bizarre. JWN is a ticker symbol for Nordstrom's, which doesn't really make sense because Macys is M, Ross stores is ROST, Costco is COST. But Nordstrom's decides to have this crazy ticker symbol out there. So those two questions out there. Now let's go back to the other one, which was from, make sure I get the gentleman's name. Tom at San Francisco. He says, when a segment of the market gets oversold like retail, is when do you play your buy or plan your buy? I'm assuming that means it also depends on what segment, right? If we look at that XRT, and there are many different ETFs, guys. This is just one that I brought up for the show. You've got to ask yourself, does this look like it's oversold? The XRT looks real strong, and it's simply because a majority of the components are in the internet space. Their online presence is what's saving them. Or companies like Target who have been open and have been generating some income along the way. So I wouldn't make that blanket statement of, hey, retail is oversold or crushed. It's certain segments. And I think that this is probably what he's looking at. This is what Tom's probably looking at, saying, what about these laggards? Groupon, Kohl's. Maybe you build yourself a small little portfolio of those ones. I personally, if you did that, I'd just do very few shares out there because I think they probably will have some upside. Let's be honest. I mean, I don't see Kohl's disappearing tomorrow, but now that we are approaching that new normal, which is, hey, I can buy all this stuff online, those companies might suffer. And I don't think that by looking at this chart of XRT that it's oversold by any means. It actually seems to me like it might be overextended. Darren says, is it oversold or bankrupt? Well, I think some of them may go bankrupt, right? Kenneth Cole, it's funny. Dave says, Kenneth Cole, he be all fancy like, no. I actually do like to wear dress shoes. One of my favorite things about traveling through Southeast Asia is going and getting custom tailored clothes in Thailand. It's one of the greatest things. They fit like a glove, and then of course you got to have nice shoes. When I was teaching in Italy, I was right by the Prada outlet store, so Prada was actually my favorite brand, but that's only because I got them at a screaming cheap deal. All right, let me try to get. I agree, Merlin. I want a beer and an appetizer. Yeah, actually, there's a place down the street, one of my favorite places here in Orange County. They have a ribeye steak, and I'm just waiting for them to open. They're supposed to open this week, so if you don't see me, it's because I couldn't get out of bed because I ate so much and maybe I have a hangover. Let's see. Last question from the viewer list here, and then I will go to whatever you guys want to talk about. This is something I get rather frequently, to be honest. I thought I would address it. A friend of mine told me I should buy some Melrose Industries stock, MLSPF. I bought 2,000 shares at $1. What would you do now? Okay, so I looked at this chart earlier, MLSPF. I gotta remember the ticker symbol because I would never trade this in a million years. MLSPF. This and there's a reason why you should never trade this type of security. For those of you who like to go on flyers and make sure you get these crazy moves like maybe Ethan is doing here, you got to be real careful because if you look at this price chart, something's wrong with this chart. You notice the data is all screwy. Fundamentally, this chart sucks. Like, you couldn't give me money, and with a good conscience, I could not invest your money in this company. The volume on it is abysmal. Let me see if I can pull up the volume for you here. I don't have it in there yet, but I'll just add it on real quick. This thing barely trades. There's no volume transactions on the security. So to me, you're averaging 29,000 shares a day. Actually, no, it's in yellow. Gotta love when I switched from white to black charts, or black to white charts, everything changed on me. So let me see if I get to average volume. Its average volume is 50,000 shares a day, which is not bad. But if you look historically, it's been much less. I mean, you were looking at 16,000 shares traded a day. That's not even close to being active. And I noticed right around $1 where this individual said that they bought it. Here's a line at $1. You know, there's days where this thing, you're lucky you got 2,000 shares without moving the needle. So now you're looking at it. You bought it at $1. You got 2,000 shares. It's at $1.50. The question you have to ask yourself is, well, where is this thing going to go? Right? How high up is it going to go? I don't know. This is a gamble. The total gamble for me. I wouldn't touch this thing. Personally, take half off the table. You know, you make yourself $500. If you took 1,000 shares off, you made 50 cents. You'd make $1,000. I know what you're thinking. You're probably thinking it's going to get up to $3.20 because that's the high that it was at. I don't know. I don't know nothing about this company, and the way that chart looks is garbage. It's dog food that I wouldn't feed to my dog simply because the liquidity's gone and the prices are way too volatile. So the original question I got to ask you, since your friend told you to buy it, where did he tell you to get out? What's the target? Why did he tell you to buy this thing? This is the problem with financial markets, is so many people get swayed by someone's opinion or decision or influenced to buy into a specific company. That chart right there, my friends, is ugly. Nope, that didn't show it up. It did this the other day with me when it was real slow. There you go. To me, that's just garbage, and I wouldn't touch it. Would not touch this thing. So Ethan, I think he got lucky. I think he got very lucky. I'd be happy with the trade as it turned out, and I'd move on, close it, and buy something else, you know, that has a cleaner chart, something that might be more predictable with regards to price action. Let's see. So Natalia asked a question that someone's wondering about. Where did Natalia's question go? People go to retail to check them out. What's the name of the ribeye place? Oh, it's called Memphis. It's actually Memphis. It's just called Memphis Cafe. Great people, really nice atmosphere. It's super small. It's one of those hole-in-the-wall places that you'll probably never see, but they got a really good ribeye. It's $27 for a pretty good-sized ribeye and a red wine reduction sauce with scallop gorgonzola potatoes and a mushroom confit. Do I sound like a waiter right now? Or can you just tell I want the steak so bad? Jeez. All right. Let's see. I don't know about ENJ. I see a lot of you guys talk about ENJ. If you're buying ENJ at 20 cents, yeah, I don't know. Entergy New Orleans is Inc. 5 cents. So my guess is this a debt instrument? I'm not sure what security this is. If you're buying it at 4 cents, you did pretty damn good. But I don't know about this security here. All right, what are the questions you guys got? Merlin, when the crash? No idea. It doesn't look like it's happening now, does it? It looks like right now it's to the moon. You know, you talk about cryptos mooning. It looks like equity markets are going to moon. You've got, again, $8 trillion coming into the equity markets, and a market in a lifting of coronavirus quarantine issues. You could see a huge rip to the upside, which is obviously would put my my S&P trade in a probably a write-off as a loss. Which I went into that knowing it's going to be one of those ones where I'm either going to make that 7-figure trade or I'll probably lose it all. And it's leaning more towards it, but I got plenty of time. I'll wait till see how the markets react with Q2. What else we got? That's a good one, GD. Since you talk about SPCE space today, SpaceX SPCE, here is the wild action in Virgin Galactic, which, you know, who knows, may end up partnering up with Elon Musk and SpaceX, and then so right now it's 1752. To me, this is on a weekly time frame, doesn't look great. I don't feel comfortable buying into anything like this because the trend isn't really defined. Daily may change a little bit. I'm not again, I'm just going to go off pure price chart. I'm not a huge fan of it. You know, you are on an uptrend. We did bounce off that 15. It is making higher highs, so it's on a slight uptrend. Again, if sometimes these things, it's about what are your personal preferences on this industry, market, or that segment. And you know, this is what we saw with space. Virgin Galactic, back in February was a huge spike off of optimism. You know, and remember, just in December alone, this thing was trading down at $7, hit a high of close to $45. So I don't know. I'm not a big fan of it. Thomasina, maybe I see your question on Twitter? I can probably bring it up here. Let's bring up Twitter. Since I have the technology and see what Thomasina's question was, hopefully I can answer it today. Okay. The launching of the future options. ES future options. Okay. So I'll bring it up here. This is the Twitter page over here, and you can see that Tomasina the cat says, "Can we talk about this when we don't have a guest?" I don't have a guest today, so perfect. All the more reason you should know future options. If you don't already, CME to launch micro ES future options. Okay, great. I just don't know the reason why you would need that. And from my perspective, if I look at the options market, I could buy options on S&P futures on the full ES contract. If I want to go on the micros or the micros, now I'm looking at 1/10 of the E-minis. So, you don't need a lot of capital to buy an option on an S&P futures contract. It's not a ton of capital. The reason I think that this is a good thing is for those that want to start very, very small and don't want to have a lot of risk exposure and say, okay, how does this instrument work? How do these options on these E-mini micros work? And start playing that way. And once you get comfortable, then instead of going to the micros, you would take a step back or take a step up and be trading the minis, which would be 10 times larger than the micro. So I think it's just a matter of scalability out there with regards to the micros, the minis, and the full S&P or the SPU contract is just the opportunity for you to get started with less capital. Which, for me, I don't think you need a lot of money to trade options on the S&P. However, there's a lot of people who don't have capital and don't want to take that kind of risk. So that's why the micros are great. You're never going to make a ton of money trading micro contracts, period. But it's a nice way for you to learn options and futures at the same time. So that's pretty much my take on that. Once you get past a few $1,000s in your account, you're at a $10,000 or $15,000 futures account, you're probably not going to trade micros. You'll probably be trading the E-minis when you're looking at those indexes. Those are leveraged enough. And again, I don't trade options on futures. I trade options on the ETFs. But if you want to trade them on the futures, you could. There's no particular reason why I haven't. I've just had a few friends of mine that don't speak very highly of options on futures and the lack of a need to do so because the leverage that you get by trading futures markets is good enough. Therefore, why push it? So there we go. Do you have any idea how to plug a spread? No, I don't. Brandon Wendell will probably be on maybe next week, and we'll talk to him about that one. Maybe we can talk about spread trades and how he puts those in. I don't know. I don't have them up here, Brendan, as far as what's the E. They won't let me get... I even opened up a futures options account, and for some reason, it's been taking forever. So, yeah, and Thomasina, I think that's probably the best thing to do is just stick with that one asset class for now until you get comfortable with it and understand the dynamics and movements of the futures market. And then once you get that down, then you can start to learn more about options. I personally think options are probably the most valuable and interesting asset class out there because of their versatility. You can do almost anything with options. It's just a phenomenal instrument, although it's more challenging to understand. There is some difficulty there in figuring out exactly what this thing does and how it all works. So I'd be a little careful rushing into options. Make sure you understand your primary asset class first. In this case, sounds like futures. Okay, two things. Oh, that's right, Dave. And you came in early to ask that one. Dave says, my question is the first comment in chat. So I scrolled all the way up to the top. Thank you very much. Hey, Merlin, in early with the question, how long do you feel it takes for the average person to become a reasonably profitable trader? I've heard and read 5 years. What do you think? Oh, how many people are right now with the FTC watching this? Everyone can be a successful trader. Look, I've known people who, at the time, were the most successful traders I've ever seen. And let me just take a step back. You go back to when I first really got started with high-intensity active day trading was back in 1998. I was an Online Trading Academy graduate going back to June. It was my first class with Online Trading Academy. It was a 1-month class. Stayed there for 1 month. Went out on the trading floor, and I gravitated around. I was smart enough to find the guys that were really making money because I could pull their trade sheets because it was just open, and I was looking to see who was making the most money. I made friends with those people. Now, from that point, I started to learn different things about different people, and there was one guy in particular. There's 3 people. Let me just say that. One of them was a 20-something-year-old kid making a grip of money. He was making so much cash, it was ridiculous. Hemorrhaging money. Of course, I wanted to see that. When we went from fractions to decimals, and he was consistent for, as the time he was there, probably about 2 years. As soon as we went from fractions to decimals, he disappeared, doesn't trade anymore. So here's, how do I answer that question, Dave? Here's a guy who I would say made it to the upper echelons of trading, was one of the best I've ever seen, but something changed and he couldn't adapt. So would you call him a profitable trader anymore? He doesn't trade anymore. He's out. The other one I saw made the illusion of greatness. And this is something you guys hear me give a particular individual a hard time about on a regular basis on the show because I think he deserves it. Anyway, this gentleman that I traded with years ago on the floor, again, another young kid, he would have these huge days, make $60,000, $50,000, $20,000 in a day, and party like a rock star. Of course, he became one of my good friends, and I got to party like a rock star quite often. What I found was he would make like $60,000 on a Monday, and then he'd lose 30 on Tuesday, 40 on Wednesday, 50 on Thursday, and make $10,000 on Friday. So here by the end of the week, this guy's down, $30, $40, $50,000. My brain told me he was a great trader because he made 60 grand. But at the end of the day, he wasn't. So I think we have to quantify what it is that makes someone a profitable or a good trader. Number one, it has to be somebody who has a specific set of rules that they follow. Again, that's why I'm such an advocate for trading plan, is you have a set of rules that you follow, not only how you plan and map out your trades, the entry, stop loss, and price target, but how you do your money management, how your position sizing affects that trade, and also how you start to progress once you reach certain plateaus of profitability. If you're not making money, then why are you trading any bigger, right? Stay where you're at until you figure it out, and then, or even go down a level so you don't lose your capital. The other thing to profitability is how one adapts to change. We are in a very, very different market dynamic right now than we were, let's say, 8 months ago. And then you go back 2 years, we're in a different market dynamic. We were in an incredibly bullish trend. Then we were a sideways chop. Now we're just these crazy big swings. So I think somebody could pick this up in under a year. I do. I think anybody could do this if they follow that. The problem is our own fear, our own greed, our own issues come to the surface and it throws us off track. We don't follow those rules. And all of a sudden we start following other people that we think are great, and now we waste our time following somebody who we think is great, who, when you look behind the numbers and see the facts behind their trading, it's the emperor that doesn't wear any clothes. So it's a real challenge. I think if you study hard, if you practice every day, you analyze the markets properly, you have a plan, a strategy in place, and a trading plan, and you're always reviewing, I think under a year you should be able to get to that point where you're saying, all right, I'm still having losing days, maybe a losing week, but my months are positive, right? And everybody's going to have those periods of time. Even myself, I'll go through periods where, shoot, looks like two months in a row, shoot, I lost. I don't want that, and if it ever gets to that's extreme, I start to scale back and pull back and pull back. But also, I know myself well enough that when I'm on a roll, I can really get on a roll. It's kind of like, and I hate to use this analogy, for me it's kind of like playing blackjack. I am a blackjack player. I love blackjack, and I think it's all about runs. That's why you stay with your minimum bet, until you start to win a couple hands, and then you scale up. And all of a sudden you get on a 6-8 hand winning streak, and you're set. To me, that's kind of the same thing, the way that I perceive trading. It's making sure that I don't go below a certain amount of loss or predetermined loss that I've defined for myself. And to me, that's part of that key towards profitability I think most people need to strive for, saying, how can I make sure I don't lose too much, and how can I make sure I manage the winners in my all the trade setups, etc. So that would be my take on that. Let me see if you guys responded back to that one. Bigad says, I continually add rules to my rules to make a new mistake. You ain't the only one. Sometimes I do it too. And you're probably thinking, Merle, you've been trading for over 20 years. How can you still make mistakes? You still make mistakes, man. You still do. You guys are funny. What do you think the ceiling is for airline stocks this quarter, specifically Spirit? Again, I'm still in that category that's bullish on airlines. I think that they're a necessary thing for the United States. For countries, for economies, period. You got to travel around and do business and move. So I think that they will, if they struggle any further, they'll get a safety net from the government. I think they'll probably rebound here fairly well. Ceiling is, you can see them return back to their highs eventually. But I think that's going to take a little bit of time till we get people comfortable getting back on airplanes. So I think it'll take a while. Yeah, Dave says, slow. The takeaway is put in time and make sure you have a plan and stick to it. Sure. One of the things that will drag you down and take I think personally the success away from you is trying to focus on too many things or do too many things. What helped me early on was focusing on just one ticker symbol. I traded one stock for almost 2 years straight. Yeah, granted, every now and again I'd trade something else, but mostly I would trade one specific security. If that's the SPY, great, do it. Certainly don't be trading that crazy stock, whatever, MLSPF or whatever that symbol. Don't trade that. It's got to be something that's got good liquidity, got to have some fairly decent moves out there and wide enough ranges. Once you find one that you click with, stick with it. I found there was a period of time where I was trading the stock called Juniper Networks. And I don't know what it was, but for some reason, Juniper Networks just consistently was a winner for me. And I have no clue why. But I would always try to trade the ones that I couldn't make money on, like Apple, right? I was always trying to get back at Apple. Oh, damn it, I'll get that this time. When I would trade Juniper, it seemed like, 7 out of 10 trades would be real nice winners. So why not just stick with Juniper? And that's what I ended up doing was I went back to trading just Juniper, traded every single day, and I started to learn its price actions. The interesting thing about that was it seemed like it would have these price actions that I could understand well enough to generate some profit, and then all of a sudden 2 years later, I couldn't read it anymore, and I just moved on to another stock. So there were a few out there. Exodus Communications was one I traded for about 2 years. Juniper Network, KLA 10 Core. That's 6 years of trading right there, just with those two ticker symbols. Anyway. All right. Oh boy, now I got a ton of questions coming in here. Let's see. Let me go to this question from Antonio. That being said, do you think market conditions are returning to normal volatility? If not, what can we expect to see? Yeah, I think we are going to see a return to normality here, at least with regards to ranges. The big question is if we start to see it roll over and there is some uptick in coronavirus cases, we see more deaths, we see more quarantine come back in, or we start to see those Q2 earnings come out, how quickly the fear spikes back up. I think right now you probably got a pretty calm trajectory till July. Which does not bode well for me. I was way too early on my entry on my puts, but it's okay. I'm in for the long haul now. But I think you'll probably start to see those ATRs start to decline and get back towards normal levels. They'll probably be higher just because of everything that's going on. There's going to be more volatility, but not the volatility we saw in February and March. I mean, that was just absolutely crazy. Yeah, Darkstar says VIX is coming down steadily. Right, because right now people are going, oh, everything's okay. It's all good. So VIX is generally going to be going the opposite direction. All right. Harrison says, OTA instructors have recommended trading one ticker to start with, but with supply and demand, I found very few trades, and it could take forever to get experience. Yeah, right. And that's why I meant if you find one that you're comfortable with, and this is why it's so important to have a journal or trade log so you can see factually, hey, this is what I'm trading and I'm successful with. TradeStation even has a performance report that you can run. It'll tell you what you're trading best, what you're trading worst. I think it even breaks down like times of the day, etc., which I think is pretty cool. Otherwise, you'll have to do that analysis yourself. Certainly, you could have a basket, maybe 5, 10 max, but you don't want to be trading, 100 different things because then you're just distracting yourself and you might miss the move in that little basket that you were trading. So, sure, trading one, you're limiting yourself. Maybe you go to a little bit more than that. Okay. GD says, hate to raise the issue, but is there a contingency plan for OTA students if they lose the case against the FTC? Unfortunately, I don't know. I am not that heavily involved with that. I know that it seems like things are starting to get much better out there. I think that this was very overblown. There's a couple of individuals, I believe, that started this whole case out of spite and anger. I think when all the dust settles, I'm hoping that when all the dust settles, a story is written about what really happened behind the scenes, and I think it'll be shocking to a lot of people to see, wow, this is really what transpired, which was certain individuals having issues with other individuals and creating things that brought down the whole system. So it's an unfortunate certain set of circumstances, but I think now that we're starting to get a little bit better voice and we're getting some prominent legal attorneys saying, hey, Dershowitz, one in particular, saying, hey, listen, this is like unconstitutional. You can't just go in and do this without any proof. You're coming up with hearsay evidence that is not true. The numbers that you guys have pulled, you're cherry picking data and not looking at the whole picture. So you're creating a false picture for the courts, and we haven't had a day in court to fight that. So I'm pretty confident that we'll come out of this victorious. And when that does happen, I will certainly be talking to lawyers to know who I can throw under the bus, because there is two people in particular that are the scum of the earth slime balls, absolute dirt balls that deserve to have their faces rubbed in mud and their reputations destroyed for what they did. Absolutely ruined. One of them people know so well, but I would love to have these people stand accountable and responsible for their actions, because I think that they really did a disservice to so many people's great education. We already saw a lot of instructors I really like not disappear, but go do other things just because there's no classes right now because of the whole FTC thing. So I think we're going to be fine in the long run. We'll probably do a lot more online stuff, which has been my role. They brought me back just to build some online content for them. So I'm not doing physical classes. I'm just doing online. No power trading radio. I'll just be doing this show and building content when I can for those guys. So there you go. Yeah, I love OTA as well. I don't want to be driving the bus, Tom Messina. Nope, no. That ship has sailed many moons ago. All right. Yeah, well, let's just say, so JD, it's interesting. He says, upset to hear that OTA instructors weren't making money from core strategy if it's true. Remember that there was one in particular who was always talking about core strategy, who wasn't making money. There were a couple others that were mentioned in there. It does not say that all on the Trading Academy instructors were not making money. Let's be very clear about that. It pinpointed 3 people. One that you all know and love and hold up on a pedestal. Okay? Read the facts. Look at the report. They pulled up account data, and it says there's no money there. I don't know whether those numbers are true or not, but I can tell you this. If I was in a lawsuit with the FTC, or anybody, well, FTC really, and it was ruining my reputation. Of course, this individual is making sure that nobody sees this. He doesn't want anybody to see this information because I think it would ruin his reputation. If that was me, and they said, hey, we pulled your trading records from this year to this year, you made very few trades, and you lost money over that period of time, if that information was incorrect about me, I would immediately host a website right there. I would post all those trade pieces and I'd say, look, the FTC is wrong. This is the real information. I don't know where they're getting that information from, but this is the correct information. That hasn't happened. So all I can assume is that the information that is in there is correct and that individual is losing money. So there you go. Until you can show the actual facts, we'll never know. That's, again, we'll have our day in court. All right. Let's see. Bigad, what do you think about real estate? I saw a couple things here about real estate. No, Bed Bath & Beyond. Merlin, I'm a fan of justice. Yeah, I agree, Brendan. And I know that Eyal is fighting for that as well. That's been Eyal's mission the entire time I've known him, is like, how do we get student success up? How can we increase it? The truth of the matter is, there's an old phrase we all know and love that says you can lead a horse to water, but you can't make him drink. And I've seen this many times where I can sit there with a group of students and say, the biggest factor to your success, don't lose money, okay? So in classroom, there's even a classroom environment, I'll set a rule. Okay, we're going to trade live accounts, real money. We're trading 10 shares. You can't lose more than $1. Okay? So that's you got 10 shares, that's 10 cents. So you have a 10-cent stop loss. How hard is it to lose $1? It's pretty easy. You set your stop loss. If you lose $1, you're out. So I'd walk around the room in the time I'm instructing people to be successful and say, here's how you do it. Don't lose a lot of money. I walk around, some guy's down $13 on 10 shares. What the hell is wrong with you? You can't even follow rules in the classroom environment. And this is the jerk, the a-hole who's going to go to the FTC and say, well, I lost all my account. I lost my money. Screw you. It's your fault. Don't blame OTA when they told you, don't lose this. Here's how you do stop losses. Every trade should be mapped out. You should never lose more than you planned. These guys and gals happen all the time. And of course, it's not their fault. It's someone else's fault. That's what just gets me all riled up and chaps my hide about this, is I'll bet you if you went to the facts of those 150 people who I believe were solicited and encouraged to come out with their bad information, not only by the FTC, but the original 2 people who I think started all this, then you would see that they made the fundamental mistakes that we teach you on day 1 of class not to do, and they did it over and over and over again, and now they want to point the finger at OTA and bring the system down. That is a travesty. So I wish we get our day in court next week. Let's do this thing fast. Let's get our day in court. Unfortunately, it'll have to be later on this year. It's crazy. All right, sorry, my rant's going on. Yeah, but see, Brendan, and this is great. He says, yeah, LOL, I keep making my own mistakes. My fault. But you own it. That's the beauty of it. You know you did it. And I do it too. I'm not, on this trade I'm making with the SPY, or S&P puts, $78,000 is what I've earmarked for the loss. If I lose all of that, am I going to point the finger at Online Trading Academy? No. Am I going to point at anybody else other than me? I might be a little bit pissed off at the Fed and our government for bailing out the economy, but it's my fault if I lose it all. I won't lose it all. But if I did, it's nobody's fault but my own. That's the problem I have. Let's see, running through some couple questions. Find me a company with unhappy customers or students. Oh, wait. Yeah, no unhappy customers or students. Yeah, and that's exactly right. Every company out there has them. And for God's sakes, don't go on Yelp, right? I can go to my favorite restaurant around here, which I think is amazing, and you'll find, 15 reviews of just how bad it is. It's like, no, you had a bad experience? I don't know, you had a waitress who was having a bad night or something? Relax, it happens. Anyway, damn you guys, you're going to make this an hour-long show. Big Ab, you guys, you suck. All right, one last chart here. Someone's asking about car. Let's see, where was it? Let's see. Okay, Darren says, do you like car for a trend long? Let's go look at that one real quick, then I'll show you economic announcements. And I got to run because I got to go take my German Shepherd for a walk as he's just chilling there. Okay, here's Avis car. I tell you, I like what it did yesterday. Actually, today. So yesterday you had that run up to its highs. And when I say highs, I'm not talking all-time highs. I'm talking this channel high. And that's what I'm looking at right here, right around 1864 on Avis. It looks pretty darn good to me. It does look good from the movement to the upside, just pure technically. Your next major area, there's a couple unfilled gaps here, which will obviously act as a magnet towards price. But, at 32.29 is an area where I would say, okay, that would definitely be a point where I'm looking to go short this one or get out of my long position. But there's a couple little stops along the way. It looks great right now. But let's be honest, it's just this last 2 weeks. They have been smoking to the upside the last 2 weeks. Don't know how long that's going to last. Personally, I'm hoping it doesn't last too much longer, but that's the situation they're in. So right now, I think car looks pretty good. Okay, let me run through this so I can get out of here before it ends up being a 2-hour show, because I know you guys would love that. Let's look at earnings for tomorrow. This is the 28th. You've got Salesforce, Costco. I'm very interested to see how Costco's numbers come out. Of course, they've been open the whole time. You have Dollar General, you have Dell. And then tomorrow is really about the economic announcements. It's a long list of those. I'll read some of the major ones for the U.S. We have preliminary GDP. We have durable goods orders, unemployment claims, home price index, natural gas storage, crude oil inventories. It's a busy day, but you notice there's also... if you trade the Japanese yen, we've got retail sales numbers. You've got retail sales for Europe as well. So there's a lot of major economic announcements happening tomorrow. Certainly be careful out there. There will be some waves. There was a question earlier from somebody asking about a Forex instructor. Tomorrow, we are pretty much going to do the whole day of just Forex charts and analysis. So if that person left, I apologize I didn't get to it sooner. If you are still here, Sam Evans will be joining me tomorrow. We're going to talk Forex and just look at charts. If you have a specific currency pair you want us to look at, let us know. You can send it on in at TraderMerlin. That's the easiest. Well, there's all kinds of easy ways, but TraderMerlin.com, you can send in your questions there. Or you can go to any one of these social media platforms and send me messages there. Or the easy... probably the most beneficial thing for the show is to put it down in the comments section below the videos, which I've been doing my best to answer all of them because I've got 6 different social media platforms. Sometimes they get lost in the shuffle, but I'm doing my best to keep everything separated and understand who sent in what. So hopefully you guys will get those questions to us. That will do it for today, everybody. Let's see. GD says, Merlin, you don't use Clik. You know why? I forgot my password, and it was just a pain in the butt to reset it, so I use TradeStation. So there we go. Oh, yeah. Yeah, thank you, Big Eb. If you guys like today's show, do me a favor, thumbs up. Click some thumbs out there. Give it a little thumbs. Give it a little love. Hopefully the thumbs will help me get more viewers. We're at almost 1,600 subscribers now, which is not too bad, considering I'm doing almost no marketing out there. Maybe in the future I will do a little bit of marketing, but that will do it for today's show, everybody. Again, Sam Evans will be our guest for our Thursday show tomorrow. If you want to know more about Forex, want to have questions on Forex, put them down below the YouTube video or just send them on in at TraderMerlin.com. Until then, happy trading, everybody. I will see you tomorrow.